5 a.m. in New York City. I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Confirmed. President Trump will now meet with President Xi tomorrow as Trump floats lower tariffs and access to Nvidia's Blackwell chips. China buys its first cargoes of U.S. soybeans. Nvidia rising, shares already soaring after CEO Jensen Huang announced a flurry of new partnerships and dismissed concern about an AI bubble. And gearing up, markets laser focused today on big tech earnings, but also the Fed decision and any forward guidance in Fed Chair Powell's comments. So it is the busiest day for earnings ever, in fact, $11.6 trillion in market cap reporting. As you can see, we're pointed higher on the S&P and on the NASDAQ 100. Russell 2000, not so much, although we're off our lows of the morning. 4 hours to go, of course, until the opening trade here. The S&P was up just 0.25% yesterday. The NASDAQ 100 up 0.75%. So we did have a lot of that optimism flowing into the session. The Nvidia comments, President Trump on his tour, positive signals out of China and so on. Let's take a look at the bond universe though, because in just a few hours, traders will turn their attention to what Fed Chair Jerome Powell will say. And how can a Fed that doesn't have any data be data dependent? We are seeing a little bit of flattening, the 10-year yield creeping up towards 4, the 30-year yield under 4.55 right now, the 2-year yield still at 3.50. So you'll see what lies in store for us this afternoon. First though, let's get across to London. Some individual movers now with Kriti Gupta. Kriti.
Vonnie, good morning. We got to kick it off with the big one. Nvidia poised to be the first $5 trillion market cap company in the world at the U.S. Cash Open. You can see the optimism around the stock already in the pre-market, higher by 3% after a blockbuster series of deals here in Europe. Deutsche Telekom earlier this week, Nokia yesterday, and now the idea that perhaps Nvidia is part of the trade negotiations between the United States and China. It's not all positive, though, everywhere in the market. Mondelez is not having a great day. It is your biggest downside mover, down to the tune of, get this, almost 6%. Looks like some weakness when it comes to the biscuit-making business. Vonnie, not enough people are buying Oreos in North America. That seems to be one of the issues persisting in this consumer goods company. And lastly, it is a fantastic day for the banks here in Europe. UBS, Santander, Deutsche Bank, beats across the board, really blowing analysts away. UBS starting to see a little bit of weakness, though, down about 1.4%, Vonnie.
All right, we are in for a rocking session, I think, Kriti. Thank you so much. Later this hour, we're going to count down to the Fed decision with Andrew Hollenhorst of Citi. Plus, we'll speak to Lange of Leiden University on the Dutch elections and Trond Grande of the Norway Wealth Fund on their earnings. President Trump then touting his success during his trip to Asia.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon, like moments or very shortly thereafter. These agreements will be incredible victories for all of us because everyone is better off when we have stable partnerships, not plagued by chronic problems and imbalances. Probably you know that President Xi of China is coming tomorrow here. And we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
So President Trump boosting optimism on trade and also expected to lower tariffs that the U.S. has imposed on Chinese opioid exports. In another positive sign, China has made its first known purchase this season of U.S. soybeans. Joining us now from Gyeongju is Bloomberg's Stephen Engels. So Stephen, bring us up to date. A lot happening in the last few hours.
Yeah, that's right. I mean, Donald Trump just pretty much said he characterized his first stop in Malaysia as pretty successful because he had a number of different deals, and then he also got that framework agreement with China. So it was a jubilant, if you will, Donald Trump today here in Korea after yesterday having a pretty successful, according to him, visit to Japan. Now in South Korea. We can talk a little bit later about the South Korean developments, but really his trip in Asia for almost a week culminates tomorrow. We don't know exactly when or exactly where, but it's going to be a meeting between Xi Jinping and Donald Trump that will, really from both sides, hopefully, shake the hand, sign some documents, and move that framework agreement to reality. Now, of course, there are stumbling blocks. Obviously, this is long in the works, and there are very contentious issues. You mentioned soybeans. That's a positive, obviously, for the United States. But there's also, of course, the fentanyl crisis. Donald Trump indicated here today in Korea that the Chinese perhaps are ready to tackle the issue of precursors of that drug that allegedly are going to the United States from China. So that would be very interesting. Will he lower that 20% added tariff? That's a possible development. Other sources have said it could be cut from 20% to 10%. So we'll have to see. Now, the U.S. is asking all these things, of course, but the top ask is for China to relax its export controls on rare earths, critical minerals, magnets, and the like. So that would be a big piece of news if Xi Jinping does go for that. Now, what's the big concession the United States is giving? Well, Donald Trump played his cards today saying we might just allow the most advanced AI accelerators, the Blackwell chips, which now have export controls to China by the White House. He could relax that and let China buy those. And that is something Jensen Huang, who is here as well, has said we need to be more strategic, more longer term thinking in our chip and technology sales to China. They're in an awkward position. Sales to China right now are zero. So that's probably going to be one of the top stories if that does come to fruition tomorrow, if Donald Trump plays that card.
And the latest we're hearing is mid-morning local time. So by this time tomorrow, we should know a lot more, Stephen. Now, you mentioned South Korea. President Trump did express optimism that that deal will be finalized very soon. It had been pretty thorny.
Yeah, absolutely, because Donald Trump says we're that close, and it's probably going to happen. It's not going to be signed, sealed, and delivered like the Japanese equivalent was, because there are thorny issues with cars and steel and the like. And again, Donald Trump's portrayal of the negotiations far rosier than President Lee's assessments. Essentially, maybe it's just negotiating tactics, but saying they're far apart on a lot of the most contentious issues. So we'll have to see. I doubt heavily that they will sign a deal while Trump is in country right now, but Trump says they're getting close. Other things could be, we heard that President Lee asked the United States, asked Trump to relax the decades-old Nuclear Control Act to essentially allow South Koreans to manage their own submarine fleet with nuclear capabilities, not nuclear weapons capabilities, but essentially asking Donald Trump to relax centuries-old law that would allow South Korea to operate its own military fleet of subs and not have the burden on the United States military.
Stephen, I've no doubt we'll have a lot more to discuss tomorrow morning as well, so thank you so much for that. That is Bloomberg's Stephen Engel there. Meanwhile, President Trump giving Nvidia another boost.
Even semiconductor manufacturing is rapidly returning to the United States. Nvidia and TSMC have just produced the first state-of-the-art Blackwell chip that was 100% made in the USA. In fact, Jensen, who's a credible guy, they're all, building now. They're building tremendous plants in the United States, Arizona, Texas, all over. We're going to have a big portion of the chip market just in a very short period of time.
Shares of the chipmaker extending the rally after the president's comments that he will be discussing Blackwell chips with President Xi, up 3.25% in the pre-market today. Joining us now is Matt Bloxham of Bloomberg Intelligence. So talk about a double whammy. Yesterday, Matt, shares just continuing to rise after comments from Jensen Huang and from Donald Trump. I mean, I guess you have to just believe that this valuation is appropriate now.
Well, I mean, I think it certainly kind of shows you the continued investor excitement about the potential of AI technology, and that kind of really is going to define the future of, humanity and corporate life. I mean, I think certainly these comments we We heard yesterday from Donald Trump about potentially relaxing constraints on Nvidia's shipments into China, including the Blackwell chip, which is their most advanced chip right now. It really would be a huge U-turn given the historic national security sensitivity that's been around selling technology into China. Difficult to know how big an opportunity that would be for Nvidia, but historically China has accounted for between 15 and 20% of Nvidia sales. So it could really be a significant bump in forward revenue if the restrictions are fully lifted. So I think people will be watching closely to see the details of whatever is agreed on that.
He's such a politician, Wong. You know, even as he was enjoying this, he urged careful engagement with China. He's just very good at walking that fine line. Now, Bloomberg spoke to him yesterday on whether he thinks we're in an AI bubble. So let's have a listen to that.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
So if he has to justify it that much, does it not give you concern, Matt?
You know, I think the jury's still out on whether it's an AI bubble or not, and you would expect Jensen to be very optimistic about the kind of future. You know, I think the reality is, like many technology cycles, at the beginning of that cycle, you see a huge investment and then it calms down. And so I think the question mark is, you know, what is going to be the sustainable level of demand for AI technology? Lots of companies investing in and spending on AI right now, but I'd say most companies are in the kind of experimental kind of piloting phase, not many moving into kind of full implementation mode yet, and there's still a lot of outstanding questions about what the return on investment of a big AI technology adoption is. So I think, you know, going to take a bit more than his kind of optimistic words to kind of really calm the fears about an AI bubble. Yeah, for sure. Well, now we have Meta, Google and Microsoft after the bell today, so a lot coming our way. Which are you looking out for most, and you know, what's the thing that you'll be training your eyes on first? Yeah, I think the kind of key thing for Microsoft is whether they are going to announce more spending on AI technology to help kind of unblock some of the supply constraints they've got, because their Azure cloud business, growing at between 35 and 40%, has been struggling to match demand. I think for Meta and Google, it's more about whether that AI trend is really eating into their legacy advertising businesses, because they are both spending a huge amount of money also on AI, and whether they can get a return on that. Matt, thank you so much. That is Matthew Bloxham there of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. UBS CEO Sergio Armati defended his bank against criticism over the exposure to bankrupt auto parts supplier First Brands. Bloomberg's Guy Johnson spoke with Armati earlier.
First Brand was a broad and well-recognized issuers in the market, and as part of a high-yield diversified portfolio. This was something that was deemed to be correct. So I think that there is a little bit of witch hunting and trying to compare things between one bank or the other, and one strategy or the other is totally inappropriate.
Mercedes-Benz confirmed its annual outlook and plans to proceed with a $2.3 billion share buyback. The company's automaking margin climbed in the third quarter, and adjusted return on car sales rose to 4.8% in the period. And Israel says it has begun reinforcing a ceasefire in Gaza after the army conducted airstrikes overnight in retaliation for a lethal Palestinian attack against its troops. The flare-up was one of the most serious since the October 10th truce. Coming up, Dutch voters head to the polls. We speak to political analyst Sarah de Lange on what's at stake next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. The Netherlands voting in a snap election today for the third vote in 5 years. And many experts say the result still remains highly unpredictable. Joining us now from The Hague is Bloomberg's Oliver Crook with a special guest. Ollie.
Yeah, that's right, Vonnie. I mean, listen, this is a landscape politically in the Netherlands that has been marked by basically a caretaker government for close to 50% of the last 5 years. As you can see behind me, there's about 15 different parties that are going to be represented in Parliament. And obviously, there's some big implications here for the EU, namely on the issue of sort of joint borrowing and joint debt. And we're very lucky to be joined now by Sarah de Lange from the Leiden University, who will be on call all day to give her analysis across what we're going to get from the Dutch elections. So just set out for us what the stakes are for this election and what your expectation is for the day.
So the stakes for this election are really whether or not a stable government can be formed that is willing to compromise and that is also able to stay in power for 4 years.
And the other question, of course, is a question of this is going to be slightly more centrist, is the expectation. It's going to go away from the far right that we saw with Geert Wilders, was formerly the largest party. We'll see what happens today. What does a more constructive relationship with the European Union look like for the Netherlands?
So 3 out of the 4 parties that are topping in the polls right now are really pro-European Union. But also much more progressive on issues such as the nitrogen crisis here in the Netherlands than the previous government. So it will mean that the Netherlands would be far more willing to cooperate with the EU on combating climate change, for example, but also to go ahead with plans for agrarian policy to make it more sustainable.
And also I've seen a big shift within the politics. And we were speaking to the Christian Democrats, who traditionally very fiscally conservative party, are saying they're now open to joint debt at the European level. How active do you think that discussion will be in Dutch politics?
That discussion will be very active because a lot of parties want to ramp up their spending on defense policy, and only a few parties are willing to pay that out of extra taxes to the Dutch population, whereas other parties are willing to accept higher debt to achieve that end.
And I think it's also going to be represented not just in joint debt for the European Union, but higher deficits within the Netherlands. Is the government comfortable with that? Do you think the next government will be comfortable with expanding the deficit?
So a lot of parties feel that, they should have not ordinary citizens pay for what is currently needed, including not only investment in defense, but also investment in healthcare, and that it should partly be paid for by citizens with higher incomes, but also, for example, by corporations. That is especially a sentiment that is clear with the Green Labour Alliance, which is one of the 3 parties in the lead at the moment.
And really probably one of the most distinct figures in Dutch politics, probably known across the world, is Geert Wilders, who is the leader of the far right, the longest serving parliamentarian within the Dutch system, joining the government for the first time, the last time around. What have we learned about him in the sort of Wilders experiment? Is that now over as far as Dutch politics are concerned, do you think?
Yes, the other parties in the Netherlands are no longer willing to govern with him. They find him irresponsible, but also unwilling to compromise. But the interesting thing is that his voters think differently. He is losing slightly in the polls, but not as much as you would expect for a party that toppled the government.
And something that also I think is quite interesting to observe within European politics is the impact that American politics has had on European politics and specifically on Dutch politics. How much has the election of Donald Trump and basically Trump's sort of way of operating, his opinions and many of the positions he's taken, how much has that had an impact on the Dutch domestic situation?
We clearly see an impact here, especially on the radical right parties in the Netherlands. For example, directly after Trump proposed the idea to ban Antifa, the Dutch far right put a motion to Parliament to do the same in the Netherlands. And that motion actually obtained a majority of both the mainstream right and the radical right.
And then just a sort of a final word, what for you is the sort of worst case outcome today in terms of what we see? Is it just basically hyper-fragmentation where you need 5, potentially 6 parties to form a government and you have continued paralysis in the Netherlands?
Yes, that would be a poor outcome. With 4 parties, it will already be very difficult to reach a compromise, and it might take anywhere between 6 months and a year. But with 5 or 6 parties, it would be nearly impossible to come to an agreement.
Well, Sarah de Lange, thank you so much for your time today from the Leiden University. And Vonnie there, sort of laying out some of the issues domestically within the Netherlands, but of course, the very sort of real impact this has of her policy, particularly at the EU level, and this question of joint debt, Vonnie, and how you're going to spend for all that, pay for all that defense spending is going to be very active. And now maybe one of the frugal nations getting on board with those Eurobonds.
Yeah, absolutely, Ollie. Thank you so much for that interview, and you'll be keeping us posted throughout the day. Much appreciated. Coming up, a look at what else is making headlines. We'll have your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, Cuba's president is now warning residents to brace for a, quote, very difficult night as Hurricane Melissa makes landfall. More than 735,000 people had evacuated before Melissa's arrival on the island of 11 million, already grappling with fragile infrastructure. Meanwhile, officials in Jamaica said Melissa caused catastrophic damage to infrastructure. Next, the Wall Street Journal reporting OpenAI's promise to stay in California helped clear the path for its IPO, which could come as soon as 2027. The Journal reporting CEO Sam Altman told California Attorney General Rob Bonta that he really wanted OpenAI to stay in the state, with a subtle hint, maybe even a threat, that the company would be willing to leave if Bonta blocked its path to convert to a simpler corporate structure. And on the front page of the Washington Post, the White House has fired all 6 members of the Commission of Fine Arts. That's as the White House prepares for some new projects. The Commission, of course, the independent federal agency that reviews construction projects in the capital region. Now, their termination coming as Trump prepares for a $300 million ballroom and a triumphal arch, among other projects. Let's take a quick look at markets as we set up for the trading day, a Fed day no less. Futures on the S&P higher again on NASDAQ 100. Bloomberg Dollar Index just a little stronger, and the 10-year yield there below 4. Coming up, Citi's Andrew Hollenhorst. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Confirmed, President Trump will meet with President Xi tomorrow as he floats lower tariffs and access to Nvidia's Blackwell chip. China buying its first cargoes of U.S. soybeans this season. Nvidia rising. Shares already soaring after CEO Jensen Huang announced a flurry of new partnerships and dismissing concern about an AI bubble. And gearing up. Markets laser focused for a big tech earnings day. Of course, the Fed decision and any forward guidance in Fed Chair Powell's comments. So right now, markets reflecting some optimism. We're off our highs for S&P futures. NASDAQ futures, though, as you can see, higher again. It's the busiest day ever, would you believe, for S&P 500 earnings. A landmark day with $11.6 trillion in market cap set to report. And Nvidia, of course, being one of them. So many positive headlines out about Nvidia. It's meeting a few milestones of its own today. The Russell 2000 just off a little bit. We are, of course, waiting for that Fed rate cut, which is almost certain to come. What will Powell say, though, and how will he talk about this lack of data and how the Fed is navigating in this environment? That's what we'll be watching out for. Well, let's get to some individual stocks to watch now. Over to London and Kriti Gupta. Kriti.
Good morning, Bonnie. You said it. Nvidia, of course, hitting some major milestones. Shares already higher by about 3% in the pre-market. If this price action continues, it is due to debut on the U.S. market open as the world's first $5 trillion market cap company. So again, momentum here on day 3 of what has been a blockbuster kind of deal spectrum that Nvidia has been on. It is not all good news in the broader markets, though, Bonnie. I do have a downside for you in Mondelez, and this is one of the biggest contributors or movers to the downside in the pre-market. Shares really snowballing for Mondelez International, down almost 6%. Weakness when it comes to some of their earnings, specifically in the North American biscuit business. That's the analysis from Bloomberg Intelligence as well. Looks like not enough people buying Oreos over in the States, but of course something that is weighing on this consumer goods company. But again, good news when it comes to right here in Europe, especially when it comes to the banking sector. Earnings coming out of the likes of UBS, Santander, Deutsche Bank. We did start the session here in London, green on the screen from all of them. Starting to see a little bit of loss of momentum from UBS, Vonnie, down about 1.3%. But the actual numbers, very strong, and buybacks seem to be the theme across the board here. Yeah, it's been a big week for European bank earnings. Kriti, thank you so much. Kriti Gupta there in London. So the team over at Citi expecting a rate cut by the Fed this afternoon, with, though, changes to the statement. Andrew Hollenhorst writing this. Powell may particularly highlight the pileup of jobs reports when the government reopens as critical to the outlook. As Governor Waller recently highlighted, either activity data will slow with jobs
or jobs will accelerate. In his words, something's got to give. I'm pleased to say Andrew joins us now. He's chief economist at Citi. So a lot to parse there, Andrew, but let's start with the government shutdown, because your base case was for it to end in the first half of November. Well, we're in the beginning of November now, practically. Do you still have that as your base case?
Yeah, we're almost there. We're still hopeful, optimistic that the government can reopen in the next couple of weeks. You are starting to see some of that pain start to build. Some of what we're seeing with the Supplemental Nutrition Assistance Program. Military payments, which are still going out. They're still going to go out at the beginning of November, but I'm not clear that that can continue throughout the month and into December. Air traffic controllers, delays at airports, right? These things build over time, and hopefully that will put pressure on Congress and we'll get the government reopened.
So what happens if the Fed gets a pile of jobs reports all at once, 3 before, the next meeting in December?
Yeah, so that makes it really complicated for the Fed. The Fed is supposed to be data dependent. They're making policy based on the data, but what do you do when you don't have data? They are kind of in a wait and see mode now. A bunch of data could pile up before that December FOMC meeting. Maybe some of it could even get delayed after the FOMC meeting, depending on when the government reopens. I think they'll take a look at that data, and they're really going to try to assess, like we wrote about, is the job market slowing down more persistently? We've certainly seen big revisions downward to the jobs numbers in prior months. Is that continuing in the data that we're seeing? If they see that, then not only is that a December rate cut, they could think about cutting further next year. So this rate cut today, as well as the rate cut in December, probably a little less data dependent just because they haven't had that much data. Next year is probably going to be more data dependent.
You pointed to Governor Waller's comment about something's got to give, right? And Fed Chair Powell has talked about this labour market as being very strange because we're seeing, weakness, but also maybe stagnancy on the supply and on the demand side. What'll give then?
Yeah, low hiring, low firing job market. It's not a great place to be, especially if you're just coming into this job market. So we're seeing that with younger workers, people coming out of college, trying to get that first job, and seeing that the demand for workers is just not that strong. That's really been the concern for Fed officials over the last few months. That balance of risk between price stability and employment shifted for them as they saw those weaker jobs numbers, more concern about the job market. On the other hand, the GDP data has been holding up okay. We've actually had fairly resilient GDP activity data. So that's the question, and that's why we need data.
Yeah, exactly. And if you go beyond December, as you say, into next year, over the next 8 to 10 months, markets are pricing pretty aggressive cuts. Will the Fed chair validate that today, or will he back off a bit?
I think he's going to be very careful about giving any guidance. He doesn't have the data, so there's really nothing to guide with. Now, at the September FOMC meeting, they put their dots down where they thought rates should be at the end of this year. The median dot did indicate that they would be cutting at the September FOMC meeting, which they did. October, today, December. So I think they can say, look, we haven't had any data. This is what we thought we were going to do back in September when we last met. With nothing to update the outlook, that's probably still the course that we're headed on. But I think he'll be very, very cautious about giving guidance because we don't have that data. We're going to get a bunch of data. And I think he'll emphasize we're waiting to see what that data is going to show and maybe even express a little bit of frustration that the government shut down and we don't have the data.
He's going to be careful about that too, though, for sure.
Yep.
This Treasury market, since we saw the move lower in yields, been pretty moribund. We've been around these levels. What could the Fed chair say that might wake this market up?
Yeah, so I think there are some things on the margin that he can say. One thing is, does he lean more on those dots that are fairly dovish, show cuts continuing through December? Or does he really say, look, we don't have data and everything could change between now and December? That would be more hawkish if he said that, more dovish if he emphasizes the dots. And then the other thing that's going on today is, what do they do on the balance sheet? Chair Powell did bring up the idea that they're getting close to a level of reserves where they would think about stopping balance sheet reduction. Do they stop balance sheet reduction at this meeting or announce an end to it? Do they wait until later? That's dovish on the margin if they do that.
Dovish on the margin. I want you to explain that in a little more detail, but also there were signs of a little bit of stress in money markets. Have those signs gone away, or what would make them be okay with stopping?
Yeah, so this is the very beginning stages of when you would see some movement in short-term interest rates. So we have Fed funds effective that moved a little bit higher. We had repo rates that moved a little bit higher. And that's actually a healthy, normal thing as you get back to a more normal level of reserves. When reserves are so oversupplied, liquidity is so oversupplied, all of those rates are kind of pushed down towards the floor. Now you're actually starting to see some life in those markets. So I don't think that there's urgency that they need to stop this at this meeting. But on the other hand, you don't want to go too far with balance sheet reduction. That reduces liquidity as you continue to reduce the balance sheet. If they go too far, and this is kind of what happened the last time they were reducing the balance sheet, then you can get more significant spikes upward in short-term borrowing rates. That becomes disruptive to the market. So they don't want to end up there. I think the question now is just really of sequencing. Do you announce that today? Do you wait until December? Is it an announcement to stop immediately or to wait longer before
And you
stopping?
say it's dovish at the margin because it would signal that all is clear if we stop today, right?
It would signal that they think that they've gotten the balance sheet down to the appropriate size. And as they're reducing the balance sheet, that is marginally tightening financial conditions, monetary policy, because you're reducing liquidity in the market. Once you stop balance sheet reduction, you're holding liquidity steady. And at some point, they'll actually start buying treasury bills, increasing the size of the balance sheet, and that'll be adding liquidity to the market again. So we're moving from reducing liquidity to stabilizing to then eventually adding liquidity.
Does this market blink if we get a two-sided descent? So obviously, it's very likely that Myron will vote for a 50 basis point cut, right? But there might be somebody out there that would say, you know, we shouldn't do anything this time around because we don't have enough visibility and let's just stay where we are.
I think we know that there are those divisions across the committee. That would be interesting if that happened. It's not my base case. I do think Myron dissents and wants a 50 basis point rate cut. I'm not sure that anyone is going to dissent and say, no, we shouldn't cut at all at this meeting. But they could, because we know that there are those differences. We know that inflation is still running above target, and the unemployment rate is not far from rates that you would consider full employment. So it's not really about, you know, where is inflation today? Where is unemployment today? It's what's the balance of risks around those variables, and different Fed officials have different views.
All right, Andrew, thank you so much. Cannot wait for later on and looking forward to reading your thoughts after this decision and a statement. I do want to bring some breaking news to you now, though. President Trump saying that he has reached a deal on trade with South Korea. That headline just crossing the Bloomberg now. President Trump saying he has reached a deal on trade with South Korea. Now to other top stories trending on the terminal this morning. President Trump saying he expects to lower tariffs the U.S. has imposed on Chinese goods over the fentanyl crisis, and also speak with President Xi about Nvidia's flagship Blackwell artificial intelligence chip. The two leaders are expected to meet in Busan, South Korea on Thursday. Nvidia shares are extending the rally, putting the stock on track to breach $5 trillion in market capitalization. That would make the semiconductor giant the first public company in history to hit that milestone. UBS CEO Sergio Armati defended his bank against criticism over the exposure to bankrupt auto parts supplier First Brands. Bloomberg's Guy Johnson spoke with Armati earlier.
First Brand was a broad and well-recognized issuers in the market, and as part of a high-yield diversified portfolio, this was something that was deemed to be correct. So I think that there is a little bit of witch hunting and trying to compare things between one bank or the other, and one strategy or the other is totally inappropriate.
Coming up, the world's largest sovereign wealth fund posts a return in its third quarter results of 5.8%. We'll speak to Deputy CEO Trond Grande next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. You're looking live at pictures of a dinner that's being held now with Korea's President Lee Jae-myung and, of course, Donald Trump, the President of the United States. Trump just saying that he has reached a deal on trade with South Korea. So a breakthrough there on that deal on trade with South Korea. We'll bring you details as we get them. He also just mentioned that he will have a 3-hour meeting with China's President Xi tomorrow, a 3-hour meeting, and then he will go home. So extra details on that meeting tomorrow and a breakthrough on that trade deal with South Korea. Meantime, Norway's sovereign wealth fund posting a second consecutive quarter of gains, a 5.8% return in the third quarter. It did miss its benchmark by 6 basis points. I'm pleased to say Deputy CEO Trond Grande joins us now. So thank you very much for joining and congratulations. Talk to us a little bit about the specific asset classes or geographies that did well and those that helped you miss your benchmark by 6 basis points.
Yeah, sure. Thanks for having me on. So Q3 was a really good quarter for us. Let's admit it. 5.8%, as you said, returns, and that was driven by our equity portfolio, which makes up 70% of our allocation. So that returned 7.7%, and we saw the strongest returns in the sectors of financials. We saw technology also doing well, as well as basic materials. So those were the three winners for us. And in terms of geography, we saw Asian markets performing really well, South Korea, China, and Japan. So we don't really take a top-down view on most sectors or geographies. So our underperformance is the result of many different individual positions, and it mostly came from the fact that we are also investing in real estate, and we fund that by not investing in equities and bonds. And so with equities and bonds outperforming, we have a relative return that is below our benchmark.
Yes. Well, 40% of your equity investments are in the US now because you do track the MSCI Global All Cap Index. Your largest holdings, Apple, Microsoft, Alphabet, Amazon and Nvidia. Have you any concerns about some of these stocks now, particularly with Nvidia potentially today topping $5 trillion in market cap?
Yeah, it's quite remarkable, right? So we see that in our equity portfolio, which is very broadly diversified. But even there, these magnificent seven companies, they make up almost 80% of our investments. So it's certainly a watch point. It's a sort of a concentration risk, very much focused around the theme of AI and the supply chain behind the AI. So it's something that we're watching out for. But on the other hand, you wouldn't want to miss out on this, this enthusiasm. So it's a difficult call.
It sure is. Now, your finance minister, Jens Stoltenberg, wants to review the fund's mandate and, of course, ethical guidelines as well. What would you hope would come out of that?
Well, we don't really, our role is to manage the fund based on the mandate that we're given. So it's up to, in Norway, the politicians and the Minister of Finance to determine, what they would see us invest in and what they would see us not invest in. So, we're kind of on the sidelines to that the discussion. But I think, things evolve, right? The world is changing and the fund has become very large. So I think, at certain junctures, it's wise to revisit, the setup that you have and see that it's appropriate.
But given the concentration risk that you talked about, would it be wise to maybe benchmark to more than one index or change your benchmark index so that you could maybe, include European stocks more?
Well, it's a difficult question, right? To a certain extent, actually, we do have not a full exposure to the US, as would be determined by a global market cap weighted index. We still have a little bit of an overweight in the European stocks. But I think, you want to choose the best benchmark possible. We don't use the MSCI, we use the FTSE, but they're pretty similar, right? So you would otherwise, or in any case, end up with a fairly big share in the US and in these big companies.
I want to ask you about your renewables and infrastructure plans, because those investments do still remain a fairly small share of your investments. But how high are they on your agenda? How will you scale green investments this year?
Yeah, so they're pretty high on our agenda. So within our mandate, we can invest up to 2% of the fund into this asset class. We're currently at less than 1%, 0.5% or so. But we see very promising projects coming online, and with the capital base that we represent and with the long-term nature of our fund, we see that these investments are really attractive for us.
So tell us more a little about that. We're seeing AI change everything in the world at the moment. Is it changing how you're looking at green investments? Is it adding potential energy investments into that bucket for you?
Yeah, well, certainly, right? So something, this AI, it needs massive data centers, it needs massive compute power, and that again needs massive energy. So definitely, it's also a theme in our unlisted infrastructure investments into the energy space that is probably going to give us some tailwind. So really excited about that.
Tell us more, though, about how you're factoring in climate change, because you do have a climate action plan. And, I'd be curious to know if you could tell us a little bit more about maybe what's not even so public about what you're doing on climate action.
I will only tell you the public things, but let me shed some light on that. Because, being a long-term investor, and truly long-term, I mean, we're talking about 30, 50, maybe 100 years. Our starting point is that, if the world is on a sustainable path, then it's going to be good for the world, it's going to be good for businesses, and it's going to be good for us as investors. So this goes hand in hand with our long-term objective. So we're not there to push the companies to do anything that isn't financially sound, but we do want to make sure that they have proper risk management, that they look at this issue and how they would be affected, both from a potential or probable transition, and also from the physical potential risks that could come out of a changing climate. So this is very much a business proposition for us.
You know, you do talk about a potential AI correction. You mentioned, you know, the concentration risk and so on there. There's also in your outlook the risk of a fragmented global economy, which we could be seeing more and more. How does that affect your decisions going forward?
I think it's a watch point, right? So, I mean, let's be honest, it's a very much of a risk-on feeling in the market just now. The valuations in many companies are pretty elevated, and that's against the backdrop of quite a lot of uncertainty, geopolitical uncertainty with tariffs and conflicts, with, let's face it, very indebted countries, and then also a supply chain behind AI, which is quite concentrated again and vulnerable. So I think we need to watch out for this, because if one thing's break, and they could break all at one point, and then we would have a severe crisis on our hands.
So how do you deal with this at meetings of your investment committee, Trond? I mean, you know, if you are mandated to have sort of 70% in stocks and 27% in bonds and so on, and, you know, reflecting particular indices, how can you hedge for some event that we're not sure will happen yet, or some kind of black swan event, or any of the list of risks that you just mentioned?
Yeah, it's a very good point. So we don't really try to hedge too much against that, right? So that goes back to the long-termness of this fund. But, you know, it's very easy to say that you're long-term. What you're saying is that you can withstand short-term fluctuations. So the point of us, you know, doing stress tests and communicating the risks is to make sure that we keep the governance and we keep the strategy also in stress times, so we don't change our minds when things look the bleakest. That's the essence of it.
All right, Trond, continued good luck. That is Trond Grande of Norges Bank Investment Management, Norway's sovereign wealth fund and the second biggest in the world. Coming up, we'll get you set up for your trading day with a Fed decision and the busiest day of earnings on deck. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Boy, is it going to be a big day. The busiest ever for S&P 500 earnings. More than $11 trillion in market cap set to report. Before the bell, we'll hear from Boeing, Caterpillar, Kraft Heinz, among others. Then, of course, we have that Fed rate decision coming at 2 p.m. Eastern, followed by Fed Chair Powell's news conference at 2:30. And then big tech earnings continue to be on deck, with Meta, Alphabet and Microsoft reporting after the close. So let's look at those micro movers now, because before the bell, Nvidia putting on more. It's set to become the first $5 trillion market capitalization firm as this AI rally extends, if these gains hold. Mondelez suffering a little bit. It cut its profit forecast due to high cocoa prices coming down the pike. And then weak results at Verona's revenue outlook miss as well, causing that stock to drop precipitously. This is the macro picture. We have futures pointed higher, particularly Nasdaq 100 futures, though they are off their session highs. The 10-year yield not really moving around too much. Gold, though, potentially some dip buyers emerging after it went below 4,000, or perhaps just a little nervousness. That's it for Bloomberg Brief. Surveillance is next.